What up, what up, what up? All right, guys, so I'm going to do a quick video here on Hut 8, ticker symbol HUT. Hut 8 is a Bitcoin mining company. They are based out of Canada. They focus on using renewable energy such as hydropower, and they also use nuclear energy to produce their Bitcoin. They have super high margins. Last year, their margins were 70%, obviously with the price of Bitcoin getting actually destroyed the last 6-7 months. Their margins have come down with it, but currently their margins are still right around 20% to mine a Bitcoin. So it takes them about $16,000 to mine a Bitcoin, and Bitcoin is currently at 20,000. So their margins are right around 20% right now at the current price levels. And it's also at a major support level on the technical. So a $1.50 area, it's seen many run-ins with this going all the way back to 2019. And then 2020, we had multiple resistance touches on a $1.50. And we ultimately broke above the $1.50 and shot up, which eventually led us to $16 a share. Since then, we pulled back. We're down roughly 90% on Hut since all-time highs. So when it comes to Bitcoin mining, they're a big company, but they're not one of the biggest. Obviously, we have Mara. Mara is trading right around $1 billion market cap. And then you have Riot, which is right around $700 million. And Hut is currently at $261 million market cap. 261. So let's go ahead and take a little deep dive in their balance sheet, because for me, this is where it starts to get really interesting and tasty for me. So they have current cash on hand, $78 million cash on hand. And if you include their digital assets like Bitcoin, they currently have $446 million of cash and cash equivalents. So almost 2 times more cash and cash equivalents than what the current market cap is of $261 million. So they must have a lot of debt, right? So they must be drowning in debt because they have tons and tons of cash and cash equivalents, but the market cap's only $261 million. No, they only have $13 million in debt. They only have $30 million in long-term debts. Total assets, if you include their property and digital mining rigs and just their plants, they have $750 million in assets. They could literally liquidate some digital assets, pay off all their debts. They could get rid of some of their cash, still have another $30-40 million left in cash on hand after they get rid of all their debts, or just keep the debt on the balance sheets and just keep accumulating your Bitcoin that you currently have. They're mining right around 10.9 Bitcoin per day, so the balance sheet grows each and every day. This company gets stronger and stronger, even though the price is going down. I think that it's getting mainly crushed because just the max amount of fear that's in the crypto market right now. There's a lot of concern that Bitcoin might go to zero, and Bitcoin's never been through a macro environment such as this with rising interest rates and hyperinflation going on. So the price is getting crushed and beaten down with the price of Bitcoin because of the fear that's just around the whole ecosystem right now. They have 7,000 Bitcoin on hand that were self-mined. So I'm pretty sure that this is the most Bitcoin that has ever been self-mined by any company, public or privately traded. We know MicroStrategy has over 100,000, but they purchased those. They didn't self-mine those 100,000 Bitcoin. So they have 3 digital mining facilities. They have 5 data centers that they use for high-performance computing, which is to build out Web3 and to build out the metaverse, which they're going to be big players in. And they actually have good margins on it as well. I don't want to spend too much time in this video going into it, but you can go through their website yourself. But they're anticipating about 25-30% margins on their high-performance computing platforms as well. So they don't just do Bitcoin mining. They actually have supercomputers that they run out and use to bring in other revenue sources as well. So keep an eye on this, guys. $1.50 area is definitely a strong support area. It's right on that level right now, but we do have a gap to fill all the way down at 50 cents. So we came down, we filled a gap already. There was a gap at $1.37. I'll try to remove this real fast. There we go. You can see $1.37. There was a gap. But there's also one right here. So usually in smaller market cap companies, the gaps fill like 70% of the time. Bigger companies, they fill 90%. But these fill up pretty often. So that's the one thing that concerns me is just the technical level with this gap is down at 50 cents. I took a little nibble today. I'm definitely not going to be sad this price goes lower. I'll just add more or re-examine it if the price comes down to this 50 cent area. This is a long-term buy and hold for me. I bought a small percentage of my portfolio, less than 1% of my portfolio is in this. So keep an eye on it, guys. Have a good one. Peace.